The big news over the weekend was Donald Trump making basically the claim that he will impose tariffs on Europe over this whole idea of the acquisition of Greenland by the U.S. And this has sparked a lot of concerns globally, and why, I'm not so sure. But, you know, the media has just gone kind of AWOL over the weekends going, oh, these tariffs are going to be terrible for the world and it's going to cause this to happen. And have you not learned yet that President Trump does this to negotiate a deal, just as we've seen in every other previous tariff episode? Do you remember Liberation Day, where he stood up there with the charts with 50% tariffs on this country? And that didn't happen. They wound up negotiating deals. The tariff rate came down dramatically. Yes, are there tariffs in place? Yes, there are, but they are about where the expectation was going into the tariff announcement. But this is how President Trump negotiates, and why the media has not learned this as of yet, by just saying President Trump announced tariffs over the weekend that nobody actually believes will actually be the case. But hey, we'll kind of wait this out and see. Look, there will be a deal done of some sort. Either he will get a deal done with Greenland or he won't, and there may or may not be any tariffs at all on Europe. So I wouldn't go out making major bets in your portfolio based on something that is very much in flux right now and that the markets are going to start to price in very quickly. What do we know about tariffs so far? Two things. One is that they don't have the inflationary impact that everybody was so concerned about last year. In fact, inflation is expected to decline further as we get into the year. Secondly, it has not impacted corporate profitability. And again, what's the one thing that drives markets going forward? And that is the outlook on corporate earnings. So we've already had all these tariffs, and right now we're talking about earnings and corporate profitability at record highs despite tariffs. So tariffs did not have the impact that was expected previously on the one thing that drives the markets over time, which is forward earnings expectations. And as long as forward earnings expectations remain elevated, and they are, markets should continue to do well. However, we are going to have a bit of a correction today. That's not surprising. We have these corrections for a while. Markets were getting kind of a bit elevated here. We've had this kind of consolidated pattern, but that correctional process is a normal process in the market. This will likely turn out to being buying opportunity for investors to buy things a bit cheaper here. Got to let this kind of work through for a few days. Catch me daily on The Real Investment Show. The link is in the description.